To slow the spread of the coronavirus, businesses and consumers around the world are putting all but the most essential activities on pause.
You must stay at home.
A global economic slowdown seems inevitable. The question is, how hard will it hit and how long will it last?
We can expect that by June 1st, we will be well on our way to recovery.
Even as a downturn looms, businesses are taking steps to limit the impact.
The price signal suggests less investment, less need for near-term oil.
We do see people taking advantage of new opportunities.
Coming up, leaders in business and finance discuss a key challenge of the coronavirus crisis: downturn damage control. Hello, I'm David Weston. Like many of you, I'm working from home. One of the ways that businesses around the world are adjusting to the coronavirus crisis as they prepare for what could be a prolonged and a painful downturn. To get a sense of the outlook, I talked to Brian Moynihan, Chairman and CEO of Bank of America, and I asked him about a worst-case scenario, so-called demand destruction.
If you think about the throughput of the U.S. economy, with the amount of stimulus, the amount of fiscal support that's coming, the amount of monetary support, if you look at economists with their 25% down in the second quarter and then working their way out, the sheer amount of dollars in that at a $5 trillion quarterly economy, $20 trillion a year, is overwhelmed by the amount of support coming in the markets. All that is geared to getting us out the other side of this faster. There was no structural issues in the economy. It's a healthcare crisis, and I think if we mitigate that healthcare crisis, you will see on the other side of this, a rebound, and that's what our economists say. So as people have adjusted their second quarter down more due to the unemployment, the new claims last week, what people are guessing will happen this week, there'll be a deeper downdraft, but most of the economists that I see and our internal economists believe on the other side is a reversion back to where the economy almost gets back to the same size, at sometime in next year that it was prior to this, which is a pretty fast turnaround. And so, I think that that's a core belief because you're not changing anything fundamentally about the business cycle, about what's going on. You're saying if you get by this virus, it works. If you look at China right now, you're seeing the data get stronger. And because in the fact they're on the other side of this situation, and you're seeing, we're seeing that when I talk to our commercial clients, that their factories that they work with is 65, 70, 75% up. We're seeing goods and shipment coming out of China, and you're seeing those factories start up, and even in some of the places that were most affected, you're seeing people go out and shop. So the question between us and that is going to be when the consumer feels comfortable going out and going to a restaurant and going to shop at a store and do things like that. That will come when the healthcare crisis is solved, and that obviously there's tremendously talented people and a great healthcare system, the best in the world, working on that every day. And when that happens, whatever time that is, that's when the behavior will revert back, and it's just a matter of how fast we can get there.
Brian Moynihan's outlook is pretty upbeat, but banks have reason to be concerned about investor confidence. UBS CEO Sergio Armati spoke exclusively to our Manus Cranny, and they talked about how to deal with clients who are responding to extreme volatility in the marketplace.
Having a large pool of cash available during the major correction has helped investors to manage the situation in an effective way. We do see people taking advantage of new opportunities. For example, this is time, in our point of view, to move into credits. If you look at historically from a risk-reward standpoint of view, there was not many times in the history where credit has been priced so attractively, and therefore we see people taking advantage of that. But also, I have to say that many clients have been very disciplined in sticking to their long-term asset allocation. Of course, once the dust settles, they will reevaluate how to do that. And in that sense, of course, we are preparing, to exploit opportunities that may be there with stocks or situations or sectors that have been particularly impacted. So I see also clients starting to take opportunities and step and buy some into some opportunities.
Sergio, we're also trying to understand where we are with the bank and the bank system. Jean-Pierre Moustier is saying that the European, he's taking soundings on banks should consider scrapping dividends around Europe. Is that a narrative, Sergio, that makes sense on your assessment when you look at Moustier's letter that he has sent out?
Well, look, I haven't seen the letter, so it's difficult for me to comment. But I would say I think that it's quite legitimate and understandable to have such a debate at this point in time. But of course, on the other end, one has to look at also the idiosyncratic situation of each single country and each single bank in order to make such an assessment. Of course, at this time, it's very difficult to manage this process because of the stigma that you may or may not create around any actions you take around this topic. What I'm glad to see is that, we are extremely well positioned. We are entering the crisis with a very strong capital base, and we are able to both fulfill our capital return commitments and policy, but also to support the economy.
Another perspective on the markets comes from activist investor Bill Ackman. Even before Congress invested $2 trillion in the U.S. economy, he moved $2.5 billion into equities, calling it a recovery bet on the U.S. economy. Now, Bill Ackman is quick to say he could change his positions over time, but at the same time, he talked to Bloomberg's Vonnie Quinn and explained why he has cause for optimism.
What's interesting is some companies are actually going to be long-term beneficiaries. It's not just Zoom Technologies, but Chipotle, we think, is going to be a very long-term beneficiary of what's taking place here. Chipotle has an amazing digital app. They've got great delivery. They've got great tasting food. It's inexpensive. You can almost feed an entire family with a couple of burritos. And their customers are now, going more and more online for digital delivery. And they're going to do the revenues today are, obviously less than they were a couple months ago. But fairly quickly, I think people are going to get tired of just necessarily having mom's food, and they want to order in, and they're going to order in during this period. And I think that's true for fast food as well. And so businesses are already adapting. Companies like Lowe's, we bought a lot more stock in Lowe's, a home improvement retailer. Lowe's is considered part of sort of the critical retail infrastructure of the country, along with Home Depot and other hardware stores, because you need to keep them open in order to keep society functioning. So they'll do fine during this period. And again, everyone does better in the event this period is shorter rather than longer. And the key is that you have to set an end date. You can't say we're going into furlough and we'll see you in 9 months. That kills every business. The other company we've been buying is Hilton. Hilton, almost every hotel is effectively shuttered, or the occupancy is down 90 to 100%. But this is one of the great, well-capitalized franchises in the business. And you could see, while people can cancel the room nights overnight, they can also ramp up very, very quickly as we recover out of this. So we're making a huge recovery bet, $2.5 billion in a couple, 10, 12 days of investing, maybe less than that in terms of business days in the market. That's about the most bullish thing we've done. And going from having a very large notional hedge on here, we were at a very large short in the credit markets. We had 97% of that was gone as of this morning, and we took the rest off earlier in the morning. We are all long, no shorts, betting on the country.
Coming up, a look at two industries hit especially hard by the coronavirus crisis: oil and aviation, doing whatever it takes to survive under devastating pressure. This is Bloomberg. Welcome back to Coronavirus Downturn Damage Control. I'm David Weston. Crude oil prices fell to their lowest level in 30 years. That was before oil producers reached an historic deal to restrict output. Well, just how intense has the pressure been on the oil companies? Here's Chevron CEO Mike Wirth talking with Alex Steele of Bloomberg in March.
We're looking at our business and adjusting to an environment where we see supply and demand changing dramatically. We announced some changes today to reduce our capital spending by about 20% or $4 billion. That actually means as we get to the end of the year, our spending rate will be down 30%, which would imply a cut of more like $6 billion as we exit the year, distributed across our portfolio, but the largest single piece in the Permian Basin, which we've indicated is a flexible portion of our portfolio and have always indicated the strength of Chevron's business was the ability to flex our capital if there were market signals indicating that was the right thing to do.
So if you cut Permian, what does that then mean for Permian production? And how quickly do you feel the CapEx shift in the Permian to actual takeout rates?
Yeah, so we were guiding this year to capital spending in the Permian over $4 billion. We've reduced that by $2 billion. So think about it coming down by half. Permian production earlier this month at our Investor Day, we had indicated would exit the year somewhere north of 600,000 barrels per day. We're bringing that number down by about 120, 125,000 barrels a day. So a significant impact from what we had laid out just a few weeks ago as we stand down rigs, stand down completion crews, and really ramp activity in our most flexible asset class to a much lower level.
Can you give me some insight, Mike, into how you're thinking of the oil price trajectory, as if we stay in the 20s for X amount of months, then we have to revisit our CapEx spend in these areas?
We certainly look at a number of scenarios, Alex. Oil price is maddeningly difficult to predict in normal times. It's impossible to predict in times as uncertain as those that we're in right now. Demand clearly is off in some parts of the world very dramatically. It's not clear when we'll see economies open up and restart and demand return. And at the same time, we've got this surge of supply that had been previously held off the market in Saudi Arabia and Russia and some other countries. And so markets work. We have a mismatch between supply and demand. The price signal suggests less investment, less need for near-term oil. And certainly that's how we're responding, and I think we're seeing others do that as well.
Another troubled sector is aviation. Around the world, air traffic has come almost to a complete stop. The head of the International Air Transport Association, Alexander Dejuniak, spoke with Bloomberg's Guy Johnson.
We are facing an unprecedented crisis. And as the virus has expanded, outside the borders of Asia and everywhere in the world, we have seen very quick and severe measures of restricting flights, banning flights, closing borders. And so the traffic has dropped by something like in Europe, 85%, in the Americas, 60%, in Asia, 70%. So the figures are enormous. And so we have been obliged, to change our estimates and to increase significantly, the amount of losses that the industry will face in terms of revenues. So we move from 113 billion US dollars loss of revenues that was 2 weeks ago to now 252 billion US dollars in terms of loss of revenues for the industry. So it's a significant increase. But it's driven by the rapidity, the speed of the virus spreading all over, and the measures taken by governments.
Can it get much worse from here, given the level of groundings that we're seeing?
Of course, it is based on a certain, first of all, magnitude of the drop. Well, we have an idea now, but also on the length of the crisis. If the crisis extends, if we are more in a U-based, recovery instead of a V-based, which is, faster and more and with more amplitude. It could be below that. If it's a U slow recovery, it could be above the 252. But the 252 is still a big number.
Last week, Alexander Dejuniak told Guy Johnson that he sees global airlines losing as much as $61 billion in the second quarter alone. Coming up, more downturn damage control. CEOs in tech, manufacturing, and pharma are helping the world fight through the coronavirus crisis. This is Bloomberg. Welcome back to Coronavirus Downturn Damage Control. I'm David Weston. While most companies around the world are hunkering down, some are ramping up, providing all of us with products and services that are key to our getting through this crisis. I spoke with the CEO of Verizon, Hans Vestberg, about what his company is doing to respond to the increased data demand as much of the U.S. workforce goes mobile.
The growth in the network is very limited. But the pattern has changed quite dramatically. We see gaming up 75% week over week. That's how much more gaming is in the network right now. We see 30% up on VPN. That's secure lines from enterprises because people are working from home. We see some 20% up on the web access, which probably also is video conferencing, etc. So we see that, and the pattern is moving out. And to be honest, we see less data usage in a city like New York City on the wireless network at the moment. So that's so important for us to constantly monitor that 24/7 to see where the capacity is moving. But from an overall network, we don't see any major growth in the network. It's very limited. It's more where the growth is happening and what type of application people are using. Our network is built very robust, so we have a lot of headroom in it, but we constantly need to monitor to see that we're on the right places and serving the most vulnerable in this situation. Of course, first responders, healthcare, super important for Verizon to see that those customers has all the access they need in these times, but also when it comes to education from home and all of that.
It's not too early perhaps to start taking a look at questions like, do you need to conserve cash? What's it going to do to your free cash flow? What's it going to do to your earnings? And do you have to reconsider the way you allocate capital? For example, things like capital investment in 5G. Are you going through that process right now?
I think that we already went through that process last week. So when it comes to the CAPEX, we actually decided to increase our CAPEX last week for two reasons. One, we wanted to see that we are really sure we're going to continue to have this robust network and the headroom we have. And secondly, we think it also is the right thing to do for a large corporation, responsible as Verizon is. We actually went out and increased our CAPEX guidance last week, and we are in between 17 to 18, and we went to 17.5 to 18.5 billion US dollars in CAPEX in 2020. That was one thing. The other thing we did was also that yesterday we went out to the market and looked out for liquidity, and we had the bond offering that will close on Friday this week. So yes, we're looking into that, but we are actually moving forward because we think it's an important time of the US and for US and for Verizon to actually do more investments.
Cisco Systems is another company responding to unprecedented demand. Its teleconferencing systems are the backbone that millions of us use to work from home. I talked to CEO Chuck Robbins about what he is seeing on the ground.
We've seen unprecedented volumes. We are, to your point, critical infrastructure for working from home and the internet service providers that are servicing all of us who are trying to work from home. I'll give you some statistics. We launched both free cloud security offers and free WebEx offers. And in the first 24 hours of putting that offer out, we had 240,000 new users sign up. And this is a platform that, before this crisis was running 300 million users per month. We are now we're doing 4.5 million meetings a day. That doesn't even include one-on-ones that are occurring on the platform. We're at 12 billion meeting minutes through March so far. And just to put it in perspective, in the United States, during any 1 hour period, we will do 100 million meeting minutes in just 1 hour in the United States right now. So we've seen incredible demand. I'll tell you, our teams are tired, but when you're talking about a platform that is now trying to support 3 to 4 to 5 times the volume that it ever was built for 4 weeks ago, they've done yeoman's work, frankly, to be where we are.
Manufacturing companies are pivoting to provide crisis relief. 3M has doubled its production of respirator masks. And although there has been some drama with the White House, CEO Mike Roman says his company will do whatever it takes to help.
The Defense Production Act really has enabled us to work together on making sure we are getting the respirators to the most critical needs around the country. And our teams are working together with FEMA, with Health and Human Services, making sure that we are delivering where the needs are greatest. So it's a partnership that really has been very effective as we've come through the month of March.
Moving beyond the N95, there's something that I'm learning about called the Powered Air Purifying Respirator, which is the PAPR. There was an announcement that 3M made together with GE and with Ford and the UAW today. Explain to us what those devices are and what the nature of this joint venture is.
Yeah, I think this is a great example of how companies have stepped up. They've responded to the call to action to do everything they can to help serve the public safety and the needs of the healthcare workers. This is a great example. Ford reached out to us to work together on anything that we could do to increase our capacity and the solutions we can bring to the market. And this powered air purifier is an area that it's an important product for use in some of the healthcare environments. And Ford can bring expertise. They can bring skills where it's needed most for us and help us increase our production of those powered air purifiers. So I'm really pleased with Ford's response and the help they've been giving us.
Meanwhile, drug companies are racing to develop tests and treatments and ultimately a vaccine. Johnson & Johnson says it has identified a promising candidate for a vaccine. It is working with the U.S. government to produce as many as 1 billion doses by the second quarter of 2021. I spoke with CEO Alex Gorsky, who gave me the details.
We're very hopeful as we look at our early data that in these cases tends to be quite correlated with what we would expect to see as we take this into human testing in September of this year. But we also know we need to complete those other trials, and we'll be doing that. At the same time, we're going to be ramping up our production, and we'll have global production. We expect to have that both in Europe as well as the United States. And we expect to be in a position by the first quarter to have a much better perspective on the vaccine itself, on the kind of quantities that we would have available. Our goal is to have hundreds of millions available by that time. And then obviously to work with regulators and other people around the world, depending on where the coronavirus is at that time, to try to make this accessible on an emergency basis.
If you were successful in the fourth quarter, when would we have a vaccine available to people?
So, David, look, what we would intend to do, again, work closely with regulators so that by late December or early January, we would expect to have some type of interim analysis in our first-in-human trials. And then at that point, we would have to take a look at that data set in its totality. I think clearly we would be also looking at how is the virus proceeding and what kind of state is it in around the world, and then make a decision. So I think at some point in the second quarter, we could be in a position, again, on an emergency basis, depending on where the pandemic is going, where there could be some access to this, and then we would expect that to ramp up significantly over the rest of the year.
That wraps up our special program, Coronavirus Downturn Damage Control. Stay tuned to Bloomberg Television and Radio for continuing coverage, and visit Bloomberg.com 24 hours a day for news and analysis. I'm David Weston. We wish you good health. This is Bloomberg.